traders? It's Joe. It's the 9th of May. It's a Tuesday. Let's get into the markets and round it up, as it didn't really do much, but we are back up to some pretty decent levels going into the CPI report. Now, guys, as I get into this market analysis, realize the CPI report was a little bit more intense, I would say, last time than it is now. The reason being is because we've seen it come in line or slightly lower, along with some other larger economic numbers showing a decline or a contraction in growth, which has made the Fed happy. So I don't know if this is going to be so much a reaction to, oh geez, we got to curb inflation and we're going to raise interest rates, as it is, are we going to look for that soft landing that we've talked about? We know we're starting to contract. Are we going to contract too fast over the next 1, 2, 3, 4 announcements of all of these numbers, not just the CPI? That's kind of, I think, where these markets are at. Now, that being said, take a look at how we finished today. Dow, the S&P, and the NASDAQ pretty much flat. Yeah, it's about a 0.5% down on the NASDAQ and the S&P, but relatively that's pretty flat considering to where we came from on Thursday. That move right back up to that homeostasis area of about the 20-day moving average. All three of these, respectively, are within a range. Oil and gold up a little bit. I still think that earnings are basically running this market right now. We've got good news, bad news, projections lower. I've got a couple to talk about that just announced. We'll get there at the end. But we do have that CPI data out tomorrow, and I did see a little bit of a sell-off towards the end of the day, but that could just be a little reluctancy, maybe some profit taking from the intraday traders. I'm not going to look too much into it because we did stay well above key points. We do have a debt ceiling debate going on right now, and that seems to be leading the whole front part of the news for you guys that love the Inquirer magazine. Please check out the United States government as we debate a debt ceiling. Whether that passes or it doesn't, or it has an impact or it doesn't, is keeping people pretty much focused on it. Outside of that, guys, I'm not seeing too much in the markets that's going to give me any sort of change in sentiment. Good news is rewarded, bad news is punished, and more importantly, it's the projections moving forward. Take a look at the advanced decline line, 60% declining, 37% advancers, 3% doing nothing. That's normal for a pullback or a hesitation day. But I'll get to the chart here in a second. That's more what I'm trying to focus on. Above below the 50-day moving average, it is literally 50-50, 56% below, 44% above. With one or two good up days, that could flip-flop again. So we have a very consolidating market. And we have seen this. It's a little bit more volatile than expected, but we've seen this consolidation for quite some time. So let's get into the first chart. And the biggest problem that I run into is when I see something like this. I get a huge move down off of whatever it could be, a panic attack. This is the end. It comes perfectly at a resistance line. Let me go ahead and try to switch this color up here for us. Right at a resistance area. This is just on the SPY. So I imagine, oh geez, is that the beginning of the end? It can't be, because we have this beautiful ascending triangle pattern. So what really made a big impact, I believe, on sentiment was what we saw Friday of last week. That was very, very strong. Whether it was just non-participation by the bears, or if there was something really, really good in those, whatever news that happened, we gapped up and pushed right back above those resistance levels. The last couple of days, I just wiped them out. There's not much really to go on. We're just consolidating. Now, the problem that I run into, and I've had a lot of conversations with the traders as of late, is we have this area of a range-bound index. Now, that's totally fine. We can play this. We can play these sideways. The problem is we're in the midst of earnings season. So I've got a little thing that I'm actually going to focus on. I'm going to get there when I go to some of the trades that I wanted selected for today. Anything that's past its earnings and had good news and is going kind of up, I'm happy playing sideways. Anything that had good news and they projected bad that's going down, I'm okay playing something bearish. What I'm not okay with is trying to play something longer term up or down that hasn't announced yet. So why don't we sit back and see what happens, at least through the earnings season. I'll give you some examples here, because what I'm trying to do is try to play somewhere in between this range, up, down, and overall sideways, specific to the sector that's under and outperforming. The SPY here, you guys can see, I just drew those lines, is completely sideways and it's got a wide range. The Qs, on the other hand, is a little bit different of a story. This is seriously a very, very aggressive looking ascending triangle pattern. This is something that I'm going to stay +1 at least in. Sideways to +1. The SPY, I don't know if I can get behind anything too aggressively bullish. So we really have to be super selective, or at least that's what I'm thinking when it comes to announcements, what they said, and more importantly, how the market reacts. I'm going to lean towards the more bull, sideways to up stuff when it comes to tech, and when it comes to the financial priority areas or the industries, the diamonds, I'm going to do something a little bit more sideways. Let's take a look at the heat map for today. As you would expect, it's going to be mixed. We had a sideways to slightly down day. Some of the larger companies giving up a little bit, but then we do have a little bit of a pop-up here and there. Not much to go off unless it's specific news. So I'm just going to give this what I see it as. This is consolidation. I've got above the 20, moving average above the 50, and the slope of the 20/50 is flattening, so I gave it a 0 for the week, but I am still +1 for the monthly outlook. Now, I wanted to be a little bit more aggressive on the monthly outlook, but I generally use the SPY to gauge my sentiment. You guys could use whatever you want, which means it might be a little bit different. If you're using the Qs, you're probably going to be a little bit more bullish, but I use the SPY. One of the things that has given this a little bit of a hiccup as of late, and I do have this as a cautionary trades, is what's going on in the financial sector. There's worries of another bank failing and so on and so forth. You can elaborate yourself. But what I see in the chart is it has strong resistance at this area that I saw at the end of April, and a very strong support bounce, which it was only one day, but this thing did gap up Friday really aggressively. Not a lot of volume, but either it was a short cover rally, I don't know what it was, but we are now in this channel. So I had to play it sideways. That's why my weekly outlook is sideways, and my monthly outlook is still going to be +1. Plain and simple here, folks. Higher highs, higher lows. That's about it. So what do I got as far as trades go? Well, it's tough. There's some trades out there that have been great. They've been great for a while. There's some trades out there that have earnings coming up, and you guys are running into the same problems that I see, but there are darlings. NVIDIA is great. TTD is great. CRM, which unfortunately has earnings coming up. ETNB, these are all very strong charts. Netflix. Now, I told you I was going to bring this back up. Netflix has had its earnings. It didn't do great, but it projected some sort of a slowdown or consolidation moving forward, meaning, hey, we don't think we're going to fall apart, but we don't think we're going to grow like we've seen in the past. This is great because now that that news is gone, we can actually try to trade the chart moving forward. TDOC is another one that I kind of like in that same situation. Let's start with the bulls first. This is ETNB. This is 89 Bio, and it has been a beautiful ascending triangle pattern that actually broke out today. Technically, I just love the way this chart is built. Now, when it comes to strike prices, go ahead and take a look at them. This is something you could do with open stock. I'm not afraid with that. Open stock is sometimes easier to trade when it comes to targeting, when it comes to adjusting stops. But understand, folks, that this thing is definitely going to need a lot of flexibility, as that 67-cent move today was almost 4%. So if you're going to put an entry at $18.10 and a stop at $18, you're not going to make it. You got to take into consideration the swings that this takes and give it the volatility that it deserves. All right, let's move on. Sorry, folks, I went too far back. Here's CRM. CRM is a nice high base pinching consolidated breakout, and it didn't quite confirm. This is on my watch list. I do like it, but this is something that I'm not going to look at for the next day or so because it did retrace today. I want to see a little bit more volume than we had. It was an increase, but it'd be a lot nicer if this closed higher. Now, for you guys that love to do diagonal spreads, this is a great opportunity just on the fact of the last 1, 2, 3, 4 trading days here off of that 190 support that you can see hit, the end of April, the beginning of April. It was its resistance when it gapped up here in March. I mean, that is a big number for this. So it's shot up. You don't think it's going to hit 210 anytime soon? Fine. Play something between the 200 and 210 sideways to up. I could get behind that pretty easily. Let's move on to Netflix. Now, Netflix is one that already announced. They said they weren't going to do great, but they're not going to do bad. I love that's my favorite announcement. And it's been kind of, it gapped down on the news. It wasn't very good, right? There's the gap. But what has it been doing ever since? It's been staying within its channel, and it might be threatening it to the upside. So sideways between that 330, 315 level, call it just below 320. Or if you believe it's gaining momentum to actually maybe reclaim this 350 level that it touched at the beginning of April, then by all means, something diagonalized. It's a super wide range stock. It's got a lot of volatility, but what I like about it is the numbers are passed. Everybody knows what it could or can't do, and now they're taking bets moving forward. I'm playing the price action on this. If this thing can stay above the 330, I would love to play something sideways to slightly up. Maybe not all the way to 350, but somewhere at least above the 330 to maybe the 340 mark. Something a little bit more tame than the volatility I've seen in the last little bit. So on the bear side, TDOC, Teladoc, this thing has been slipping quite a bit. This, to me, is more of a technical trade. What I love about it is you have a bear crossover. Big volume that didn't go anywhere. It hit that $28 level and absolutely failed. The volume has subsided, a couple of hiccups here, but this stock is just out of favor. Now, I'll give you this. There is a slight slope. But what I love about this is, well, let me go ahead and erase and start over, folks. I like the crossover that I saw the end of April, and I love today's candlestick. Now, a couple things we can do here. If you're a diagonal player, I'm okay getting into this in the next day or so, and targeting it 24, maybe sell the 24, see where that goes, then go ahead and try to sell that 23, so on and so forth. If you want to be a little bit more aggressive in direction, I'm okay if you just go ahead and wait for this to come back between that 24 and confirm something a little bit more substantial as a breakdown. Now, yeah, I do think it'll hit that 22, but if it can continue down here and break this area with any momentum, that 22 might not hold as much as you think. The big key factor is breaking this level here. Oh gosh, I have to include this as well. But right around that 24 level, if it can break that with any sort of momentum, then it's going to be a pretty good directional move to the downside. This is definitely going to need the market to go with it. It's also going to need the sector to go with it. Things of that nature. Keep that in mind. All right, some things on my list. So overall, folks, we got a debt ceiling debate and concerns. Grabs the focus of the markets. I dealt with this in 2008. Trust me, I've seen debt ceiling debates. I've seen government shutdowns. I've seen Congress hold out. And it really doesn't do anything but just cause a lot of hoopla and a lot of problems when it comes to political outlook. If you want to use that, sure. Just make sure that you're in the correct direction of momentum and sentiment when the markets go either up or down. Earnings results and projections, I believe, will continue to be the main driver. Keep focus. I want to skip down to the bottom, but let me finish up here with economics. CPI number out tomorrow. I truly believe for the first time, I might be wrong, that this CPI number is not going to matter compared to what we've been focused on for so many months, where the CPI was the know-all be-all. I just don't think it's going to be there unless it's way outside of expectations. If it's in line, it's celebratory. That means what the Fed's doing, what the markets think, they're all right. The problem we need to focus on past that is, are we going to get a soft landing, or is the CPI number going to continue to invert and we're going to fall apart? That's its own problem. So the markets expect the Fed to remain dovish with inline estimates. No change. Earnings. So Airbnb, OXY, EA, Wynn, Rivian, they all came out today. I checked a few of them. Let's start with Airbnb. Airbnb is down about 11%, almost 12%. They had lower than projected bookings, and they expect a slowdown moving forward with a contracting economy and expectations of a slowdown in travel. So a little bit more bearish. And as last I checked, they were down about 11%. OXY is down about 1.75%. They're blaming the lower fuel costs of hurting their bottom line as oil has been falling. Basically, oil and energy has been falling wayward. EA, decent, came in, beat numbers, projections. They're looking to grow a little bit, 2.3, about two and a half, just under 2.5% up after hours. And then Rivian's a fun one because it's up. It's up about 7%, which is only a buck off of Rivian. Rivian missed, but they missed by less than projected, so it became a little bit more positive. So they're actually up 7%, which is about a buck. So we'll see how that plays out in the long term. All right, guys, that's all I got for a Tuesday. Thank you so much for joining me, and we'll talk to you next time. Bye, folks.